because variable rates are very dangerous. In Spain, 98% of people take variable rates 40 years. And this is quite dangerous for the system, for the economy, and for the people. Should we begin to change regulation, taking into account that the human being is fragile when taking a decision? How do you assume future liquidity? When you have an asset which is liquid, you tend to believe it will be liquid in the future, and this could be a great mistake. Now, the 5 main mistakes I've seen in risk management in following this crisis, on one hand, is not measuring well the non-risks. If you think about my former bank, UBS, they bought subprime assets, mortgage-backed securities, and they just covered protection. They protected upon the first 2% loss. If you think about subprime, this is basically giving me money to what we call ninjas.
Will be Charles Andrew Broadley. He's currently the Chief Executive Officer, CEO at Al-Khabir International BC since July 2007. Mr. Broadley's work experience includes working as Head of Investment Service Division at the National Commercial Bank, NCB, for 4 years, and as CEO at HFS Bank for 7 years. Mr. Broadley has 27 years of experience, comprising 20 years in senior positions in financial services, of which 6 years in South Africa, 5 years in the Middle East, 2 years in the United States, and 7 years in the UK. He has worked 7 years in professional services, of which 4 years in South Africa, 3 years in the UK. Please.
Assalamu alaikum. And to this great university, thank you very much for the opportunity to be invited to speak here. We at Al-Khabir have a very special relationship with King Abdulaziz University. We're the largest Islamic merchant bank in Jeddah, and as a result have built up a great relationship with the university, have recruited many people from this university, and are very happy to have enjoyed that relationship going forward. I, like Inesio, are going to speak in English, but hopefully you can find the presentation in your packs if you are not able to understand what I'm saying. I want to talk really about Islamic asset management, and if I think back to when I arrived at the beginning in Jeddah in 2003, 6 years ago, one of the first things I did, I was working for the largest Islamic asset management company in the world, here, based in Jeddah, and the first thing I wanted to do was to understand what people felt about Islamic asset management, and immediately commissioned a questionnaire to 500 investors in Saudi Arabia, 70% male, 30% female, 50% in Riyadh, 50% in Jeddah. And we asked these 500 people 71 questions. And these 2 questions were particularly interesting at that time. On the left-hand chart there, only 10% of the people we spoke to said that Sharia compliance of their investment product did not matter. And 90% said that Sharia compliance of their investment product was either important or very important to them. And on the right-hand pie, another question we asked them was very interesting. 65% said that they would use Sharia-compliant investment products even if they had to compromise some return or service quality. And it was with this very important research in mind as a foundation for our decision-making that was a mandate to believe strongly to keep developing the Islamic asset management industry. That people actually felt this resonated with what they wanted, and that they wanted to invest in a way that was aligned with their own deep-held faith. And from that early research, there has been great growth. As you can see from this slide, the number of Islamic funds in the world now has grown from 210 to 700, which is an annual growth rate of 21%. And the amount of assets under management, the amount of the value of the funds invested Islamically has grown from $20 billion to $44 billion. So even despite this big crash that we've been talking about, there is still a significant growth, 13% per annum, in the money that's invested Islamically in the world. And this is a function of an increase in the number of players, a lot more people involved in the business, a very large increase in the types of funds available for people, and that means a better choice for investors. And we've seen that investors have been putting their money into these types of funds. The concentration of these funds has mainly been in the countries here, in the GCC and in Malaysia. And from this pie chart, in fact, which is the top 6 countries in the world, 5 of those, all but one small one there, is either in GCC or Malaysia. And so those countries really have well over 80% of the Islamic asset management funds in the world. And as you can see, there really is a lot of unfinished business. There are large populations in the world of Muslims where there is not a thriving Islamic asset management industry. Some of those examples there of huge populations of people who are not getting the delivery of Islamic product that, for example, we are here in Saudi Arabia. The good news is that by and large, Sharia-compliant investing has outperformed conventional investing. One of the main reasons for this is, as you probably know, that in avoiding riba, we have avoided investing in conventional banks. And not surprisingly, from what you've heard from my colleagues, from Dr. Ahmed and from Ignacio, the banks have been one of the ones that have suffered the most in this environment, and probably justifiably so. And so, fortunately or otherwise, being Islamic investors, we've been able to avoid some of the worst investment performance. And that difference in the top 2 lines there, the red and the blue line, is actually an 8% difference over the last year and a half, which is quite significant in terms of outperformance of Sharia-compliant investing. But even though it has done better than conventional, it does not mean that things have been good. Clearly, in each of the asset classes that you look at, in equity investing, which is the stock market, there have been large losses, a lot of volatility, ups and downs, and some major, selling off of equity holding. In the fixed income, we've also seen lots of, in the area of sukuk and other areas like that, we have seen a lot of pressure as well, as we have seen those corporate spreads widening, and the discounts on sukuks getting bigger and bigger relative to the underlying. And in real estate, we've seen the same thing in property. A lot of distressed sellers, people having to sell real estate, and a fall in valuations. And so you can almost say there hasn't really been a safe place to be during this time, even for someone who's investing Islamically. And even cash hasn't been very attractive either, because there's been a big flight to quality. And of course, as you know, the cash returns, if you look at your Murabaha funds and so on, the returns are very, very low. Profit rates are extremely low. And you're all familiar with what's really happened in our local market, in the Tadawa, in the Tazi. An incredible increase. If you see how, when I arrived here in Jeddah in the beginning of 2003, the Tazi was about 2,500 Tadawa all share. And then we had this amazing bull run all the way up until February 2006, when it peaked at 20,600. And everyone who was living here will know what those days were like. There was really nothing else to talk about other than what was happening in the stock market that day. The chat rooms of our websites here did nothing else but talk about it. And everyone just did whatever they could to put whatever amount of money they could into the stock market. It was a crazy time. And then, of course, it peaked and has fallen way back, had a bit of a recovery a couple of times, and then, of course, suffered the second wave when we saw the international markets collapsing after Lehman Brothers went down in September of last year. So it has been a very roller coaster ride here. And maybe this is a surprise to you, this slide, in terms of showing you how, if you put on the same graph the oil price in the blue line and our local market, the Tadawa, on the red line, how these two have not been correlated. Often if you talk to someone else in the world, they say, well, obviously, oil's going up, your market must be going up, and the other way around. This is not actually what's happened. If you look at the experience of the last 6 years, we had our big boom in our stock market long before the oil price started to rise. And when the blue line started to rise, in fact, we were suffering enormously, and it has not been correlation. The correlation coefficient of these two is very, very low. That doesn't mean it won't always be the case, but we